Uh, Good evening to one and all present here. So, this is Ayyappa Srinivasan of Mother Teresa Engineering College, working as assistant professor in EEE department and EDC coordinator of the same department. On behalf of our management of St.Mother Teresa Engineering College, principal, HOD, staff and students, I welcome each and everybody. And in the today's session, Ty Candrel, an expert of angel investors, is going to present an introduction about angel investor. A look at angel investors. He says who is an angel investor, what is angel investment, etc. So I directly start the session of angel investment. Thank you. Now I directly start the session.
Hello, everyone, and welcome to our training today. So today we're talking about angel investors. We're talking about who they are, how they work, and we're talking about how you can get your hands on money from angel investors. So by the end of this training, you're going to basically know everything you need to know to be able to go in and actually get capital from angel investors. So for those that don't know me, my name is Ty Crandall. I'm CEO of Credit Suite. If you're looking for capital for your business, that's what we do. We help business owners get capital by bringing together all funding sources in one place, by helping you build business credit without a personal credit check and personal guarantee, and also improving your fundability. So if we can help you get money for your business, feel free to visit creditsuite.com/get funding or give us a ring for a free consultation at 877-600-2487. So look, obviously a lot of things are happening. The economy's in flux right now. A lot of businesses, big and small, are closing. There's just a lack of access to capital. And a lot of people are wondering if they're able to get their hands on the money they actually need to survive and succeed through all this. And a lot of people have relied on PPP loans. We talked about this a little bit yesterday in our live training. It's a great way to get money. If you haven't already got in on SBA's PPP, well, then you really want to get in. But the funds are limited and they're reducing still quickly day by day. So again, that might not be the crutch and your only crutch that you want to rely on, because it's not something that's going to be able to give you additional funds for another round of potential shutdowns or pullback from opening things up, et cetera, et cetera. So this is where angel investors, I think, can really come in, because angel investors help a lot of early stage companies, especially startups, get their business off the ground, as well as even some existing businesses. And it's not money you have to pay back like you typically do with loans, okay? So again, it doesn't have to be difficult to get the capital you need. It's just a matter of looking at the right source. And this is what I call the cash access problem. It's the number one problem I see with business owners getting money. It's not that money's not available, okay? Right now, there's $13 trillion in the angel investing and venture capital space floating around, waiting to be assigned to businesses just like you. $13 trillion, okay? So there's a lot of money available. There typically is. But the problem is business owners don't know where to go to get it. They don't know how to get it. So that's exactly why I think this conversation about angel investors is important, because it's a great source to go to get capital, but you need to know where to go. You need to know how this whole thing works. And that's really what I want to dive in and decode for you today. So let's start with the basics. What is an angel investor? Well, according to Investopedia, this is a private investor or seed investor or angel funder, is a high net worth individual who provides financial backing for small startups or entrepreneurs, typically in exchange for ownership interest in the business. Often angel investors are fun among entrepreneurs, family, and friends. We're going to talk about the difference between affiliated and unaffiliated angels today. And the funds that angel investors provide may be a one-time investment to get the business off the ground, or a continuous investment. So it gives you an idea from Investopedia. So let's talk a little bit about where they come from. Well, actually, it's interesting because angel investing actually stems originally from Broadway theater, and it's actually still used today. Okay, and it was actually used to get investors to back plays. And these people are also called patrons of the arts. So what's interesting here is that there's still a lot of funding for the arts that is specific to crowdfunding, venture capital, angel investing even today, but obviously it's expanded into a lot of industries, probably including yours and mine as well. So who can be an angel investor? Well, they're not covered under the SEC. They don't have to be accredited investors. A lot of them are accredited, but they don't have to be. Now, if you want to know what the accredited investor is, An accredited investor is a person whose entity is allowed to deal, trade, and invest in financial securities as long as they satisfy one or more requirements regarding income, net worth, asset size, etc. So a lot of cases, an angel investor or somebody that's accredited as an investor by the SEC, for example, has to have a certain amount of income and has to have a certain net worth, like $1 million of net worth, for example, or $250,000 in annual revenue. So they have to meet revenue requirements. They have to actually also meet they have to meet revenue requirements of what they earn in income a year, or they also have to come in and they have to meet certain criteria, such as having a certain net worth. That's what accredited investors are, right? So the nice thing about angel investors is you don't have to be accredited to be able to lend in the angel investment space. So that means that a lot of other people are coming into the space, like people just like you and I that want to put in $500 or $1,000 and invest and get some kind of return. A lot of regular people are able to invest because everybody doesn't have to be accredited, even though many investors that are in the angel space are. So let's talk about who the most prolific angel investor is. Well, that's Jeff Clavier, per Inc. magazine. He's invested millions in over 200 companies. He's also the founder of a seed venture capital company in Silicon Valley called Uncork Capital. And he's both an angel investor and venture capitalist. If you don't know the difference, I'm going to decode it today. You're going to know the difference. And as a matter of fact, I have a really cool hack or a trick that I've indirectly accidentally learned to get these guys to come to you to get money instead of you going and pursuing them. And we'll talk about that as we jump in a little bit today as well. So who can be an angel investor? Well, there's a number of angels who aren't millionaires. A lot of people are, friends, colleagues. They have home equity. They've got money in stocks they're not earning a return on. Local professionals, people, that are definitely good sources for angel investors. And there's a lot of people you might not know. We're going to talk about how to access both of these groups today. But in order to do that, you need to understand the difference between affiliated and unaffiliated investor. So an affiliated angel investor is a person friends and family, coworkers, managers, employees, customers, suppliers, vendors, even competitors. So I talk about this all the time. The statistic is that 75% of business owners get money from family and friends to get their business off the ground. Those are called affiliated angel investors. They actually are people in your circle. They're people they're people that you might work with that know that you're awesome and know that you do awesome on your own. They're friends, they're family members. There's all kinds of people out there that would want to invest money if they're going to get a rate of return, are not happy with stock market, are not happy with what they're getting in properties. And so those people that are affiliated to you. And there's a reason that's important, because unaffiliated investors really like it when you have affiliated investors involved for obvious reasons, right? I mean, if we think about this, if I am going to lend money to somebody I don't know, it makes me feel a lot better if people that do know that person have also invested. So if I'm going to invest in somebody that's starting a business and they said, look, my dad, my mom, my brother, my grandpa, and 3 of my friends have invested, I feel pretty comfortable, because if the people in that person's circle trust them enough to give them money and invest, then that's a pretty good indicator that I should be able to trust them to invest as well. So unaffiliated angel investors love it when you have affiliated angel investors involved. Now, unaffiliated is just what you'd expect. It's people you don't know. It's area professionals. It's entrepreneurs. It's middle managers in companies. It's people that work as angel investors or a part of angel investor networks. So there's definitely a lot of ways that you can actually access unaffiliated angels, and we'll talk about them today. But that clearly is a difference. Affiliated angel, somebody in your circle. Unaffiliated angel, somebody not in your circle. You can't write off people that are in your circle, because a lot of those people are easier to get money from because they know you and trust you. And when they're on board, it's easier to get the unaffiliated on board. So some things to keep in mind there. And snipes like Wesley, it's not easy to find an investor at this time of era, COVID-19 area. So here's what's interesting. And snipes like Wesley from YouTube brought up a good point. He says, it's not easy to find an investor at this time of era of COVID-19. That's actually the exact opposite of what's actually going on. What's happening, as I mentioned starting this, is that there's over $13 trillion right now floating around in this space. And what's happening is a lot of people right now are learning to invest in other businesses instead of starting their own. So when we have recessions like we're getting into, then what happens typically is small business ownership takes off. People start their own business because they're sick of being victims of working for other people, and then that business shuts down or they get laid off. So business ownership spikes, right? Well, what's happening right now is a lot of investors that are existing are already looking for existing businesses because let's be honest with you, think about it. Is there any better time to invest in a business or buy a business than right now? A lot of businesses that have done very well and are very successful are down right now. So now's the best time. They're looking for help. They need help more than ever before. So I have several people in my circle that what they do is teach people to buy businesses, and they're telling them this is the best time you're going to find to buy a business. It's the best time to invest in an existing business because right now is the point where you can get the best deals. So this is a great time. Anytime we get into a recession, business ownership takes off. A lot of people start businesses, and a lot of people start investing into existing businesses and buying existing businesses because it's a buyer's market for the most part. The people that are investing, it's kind of their advantage. So it's a great time right now. This is one of the best times that people that have money look to invest into businesses. So what do these guys do? Well, they're informal investors. They generally invest in the start of a business that is in exchange for often for equity. So let's talk about this. There's two kinds of financing that exists in the business world, right? There's what's called debt financing. And debt financing is where you get debt, you owe people money, and then in exchange for the money that they give you. So they come in, I get a loan for $100,000. I have debt for $100,000. I pay that back at a 10% interest rate. That's called debt financing. If I get a credit line for $50,000 and I have an interest rate of 8%, that's called debt financing. And there's what's called equity financing. And equity financing is where you're exchanging a piece of ownership in your business for the actual equity or for the actual money you need. So instead of getting $100,000 and paying it back at an 8 or 10% interest rate, with equity financing, somebody's giving you the $100,000 with no expectation that you pay them back monthly like a normal loan, but they now own a small stake in your business. And when you sell that business, when you go public, when you do whatever you're going to do to exit the business, that's when they get their money. So their money's not getting paid back a little over time like a loan, a credit line, or debt financing. They're getting their money when you exit. So it's an important point because as we'll talk about, angel investors want you to have an exit strategy involved. They want to know that you actually have a plan to be able to exit. So what's the most prolific angel investment of all time? Google. You know this guy, Jeff Bezos? Gave $125,000 in 1998, investing at 4 cents a share. Original investors made over 10,000 times on their initial value. And he also got involved in Twitter in its second round of funding. It's why he's worth now going to be the potential first trillionaire in the world. And a lot of people don't realize this. A lot of people think Jeff was back in as the Amazon guy, but people don't realize that he made his initial money to start Amazon back by investing into Google, by actually getting in on Twitter's early rounds. That's where he made his money. And that gives you an idea of how massive the payoff can be for these guys. But you also need to know that the angel investors are very different than debt financing lenders because angel investors want very high risk deals. Yeah, you heard me right. They want really high risk because really high risk is also really high reward. So this is the opposite of borrowing money from banks. It's why you need to know about this. Angel investors and venture capitalists, they want high risk. They want to get into something that they know is high risk, but because it's high risk, if it pays off, it's very high reward. Banks, fintech lenders, they want lower risk, right? So most people that try to go get money can't get money because they're looking at lenders that like focus on lower risk. But angel investors focus on higher risk. So it's perfect for a lot of you because you might be getting into more risky startups where angel or venture capital is the better way to go than actual debt financing. Now, angel investors who seed startups which fail in the early stages will lose their investments completely. There's no FDIC for angel investors. Therefore, professional investors are looking for a few things. Like I said, a defined exit strategy. What is your plan? When you meet with angel investors, there's a lot of things you want to go over in a pitch deck, but one of the biggest things that you want to make sure you go over is how you're getting out. They want in 3 to 5 years you to have a clear path to sell the business, exit the business by getting acquired somewhere, going public. Those are typically the most 3 common ways that you exit a business is acquisition, you get acquired, you sell the business, or you go public. Those are the main 3 ways that businesses are sold. And they want to see that you have a plan to get there in 3 to 5 years. Because remember, that's when they get paid. That's when they get their money back. They're not going to want to invest into a company where they're not going to get any money out of it for possibly 7 to 10 years, unless it's a gigantic company like Uber that could potentially be worth millions, if not hundreds of millions of dollars to them. So the effective internal rate of returns for them is about 20 to 30%. So let's talk about this. This is why angel investors exist. If you look at the return people get on the stock market, if you look at the return people get on real estate, it's not usually 20 or 30%. So 20 or 30% return on your money, meaning I put in $100, I get back $120 or $130 is a great way to go. That's why angel investors exist, because angel investors in venture capital make massive gains, okay, when you look at their entire portfolio, but they know they're going to have losers, meaning they make no money and lose all their money, and they know they're going to have winners, which could be home runs. So it's a higher rate than banks will take, okay, but bank loans and credit are often an option aren't usually an option for startups, as we know. And as a result, angel investments can really be ideal for entrepreneurs who are still financially struggling during the startup phase. Okay, if you're really struggling to get money to get the business off the ground, then this is a great way to go, because a lot of banks and other financing options just won't work for you. So how can a company get angel investing? Well, you can connect to affiliated angels, obviously, just by asking. These are people just in your circles, right? These are, as we mentioned, the family members, the friends, just telling people that you're going to get a business off the ground, telling people that you're raising capital to get your business off the ground, actually having some things defined, like how much money you're looking for, your pitch deck presented, your pitch deck already created, and what you're going to use the money for, etc. Those kind of things, having those readily available are very important. And then what you're able to do is you're able to actually come in and you're able to actually be able to be ready when people say, hey, yeah, I might want to be in on that. So what's interesting, and this is one of the best lessons I've learned in business, is that, success happens when preparation meets opportunity. So you want to be prepared. And when you're talking to the people in your circle, you want to be able to say, hey, I'm raising money to get this business off the ground. And then you want to kind of have a rundown of things in your head that people may ask you, because you might find a lot of people would actually be interested. And I'll give you an example, right? Credit Suite's a very successful business. And the people that are in my circle have seen me build other successful businesses. So if I go to people in my circle and I say, hey, I'm getting ready to get this thing off the ground, I think it's going to be huge. And I'm looking for potential angel investors. So if you know anybody, I don't even have to ask them. I say, if you know anybody that's interested in investing, I want to come to my circle first before I go to unaffiliated angels. And a lot of people are at that point might say, hey, I'm very interested. Like, I'm very interested in getting in on this. Talk to me a little bit more. So again, being prepared and talking to people around you is very important. Unaffiliated angels, advertising, business brokers, cold calling. You can just do a lot of research. I'm going to go over a lot of places today to find unaffiliated angels. And as well, some good Google research can help you. And the reason I say that is that a lot of angel investors lend in industries where they have experience. So there are angel investing networks and angel investing platforms just for software companies, as an example. So depending on the industry you're getting into, you might find angel investors specific on that industry. Obviously, not enough time today to be able to go through every industry and networks for every industry. But there's even intermediaries. There's even networking events. Okay, there's a lot of places you can go that are actual group meetings. Now they're virtual or in person, where you can actually go in and get interested or get into groups of people that are looking to invest into businesses. So one way is called Gust, and it's probably the best way I've found to find angel investors. It used to be called AngelSoft. You can get them at gust.com. And they keep a database of investors, companies, and programs. Startups can also search for planned competitions and more. So look, the way that angel investing works in a startup range, well, let me expand from that. You can get grants to start a business. You can get angel investing. You can actually be part of competitions to be able to start a business. Any of those are really feasible options. But again, Gust is a great way. It organizes all of that and gives you a place to go to actually find to find unaffiliated angels. You can also look up angel investing groups. Now, typically they'll include, or on Gust, typically it includes a profile with information about what industries they typically fund. I mentioned that. A lot of angel investors like to lend money to industries that they're familiar with, that they can provide value to. So if I'm going to invest in a business, it's a startup, I'd like it to be a business that I can provide my own expert experience to help that business owner succeed. So a lot of them are very industry specific based on the experience that the actual investor has. They want to oftentimes invest in industries that they have similar experience. You can also find programs on Gust and see the deadlines, basic information about the amount they fund. You can look up companies there, including the profile and the founder's information. Gust gives a search for angel investors. It just makes it really organized. for you to actually find angel investors. Now, you can also try a place called Angel List, one of the other best sources I found. It's at angel.co, or you can try the Angel Capital Association, and you can see angelcapitalassociation.org. You can directly contact investors through both platforms as well. So some things I want to get into, because I don't think I have this as we move forward. And I want to talk more about places you can actually find investors. But one of the things I do want to bring up here is how to actually put together a pitch deck. So you're going to need a pitch deck put together to be able to do this. And I'm going to have a whole training on pitch decks that you're able to access. I think you can find one on our YouTube channel now. But let me tell you a little bit about what actually needs to be on your pitch deck. Okay, you really want to talk a little bit about your business, what it stands for, the core values that you have, the mission, the purpose, kind of what you do as an actual company. You really want to come in and also talk about your numbers, your existing sales, your margins, your profits, and projected financials as well. Okay, they're going to want to know all about your business, not beyond just your mission statement. How many employees do you have? How's your business structured? How is it broken down? How is everything put together? What is your basic business model, right? They're going to want to see the problem that you solve. In our case, we help business owners get capital, statistics and everything to support that that's an actual problem. They're going to want to see how you solve the problem. What's unique about you that solves your problem? That's going to want to be in your pitch deck. They're going to want to know more about your market, the actual market that you serve, okay? How many people you're actually are available? How many people can you actually market to, for example, okay? Why you're unique, why you're the obvious choice. They're going to want to know about your team, how many people you have on your team. Are any of these people they should know about? They're going to want to see your bio and the bio of any other C-level type of team members that you have. They're going to want to know your customer demographic. Who is your customer? Okay. Who are they? What is the demographic? What's the age? Are they male? Are they female, etc.? They're going to want to know that as well. Okay. So those are the main things, about 10 things that you're going to want to put on your angel investing slides to make sure, or to put together your pitch deck, maybe 12 to 15 different slides. So then again, you have it ready to go. Okay. As a matter of fact, one of my buddies taught me the best way to do this, and here's how it is. Put together a pitch deck with those things that I just mentioned, okay? Put together the pitch deck, and then you have maybe 10, 15, 20 slides. Then do a video just like this where you're on camera, and then you record the video talking to the camera, and then you're also going to have it edited where those slides can come in while you're talking. So if I'm talking about our numbers, well then boom, the slide would show in the video that actually shows our numbers. Once you do that, then create a non-disclosure agreement. Attorney can do that for you. You can find them online, and then set it up. Electronically send them to a page. They have to electronically sign to a place like DocuSign, your NDA, your non-disclosure agreement. Then they get to the page with the video, and the video basically goes through what you're looking for investors. Everything, it's your pitch. But instead of actually pitching to angel investors face-to-face, you're pitching online to them. And this is a great way to go with affiliated angels. So let's say I'm starting a business, right? If I'm starting a business, I put together a pitch deck with those 10 things that I went through about what needs to be in a pitch deck. Okay, if you missed this, you can find it in a replay on YouTube, Facebook. Go back, stop, and write those things down. Now I have a pitch deck. Now I film a video just like this and say, okay, here's our market. Problem we're solving is business owners can't get capital, and here's statistics that show that. Okay, how we solve it is we help business owners get capital by improving their fundability and building business credit and getting financing. And here's our competition, blah, 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 right? So then I give them a link to even download the pitch deck and how much I'm looking for, what kind of terms, et cetera, that I'm looking for. Now, when I have somebody that I say, hey, I'm looking to raise money for my business to get this thing off the ground, and they say, I might be interested. I say, look, here's a website you can go to. That's all I have to do. And then I say, I'll follow up with you. And then I call them in 2 days and say, hey, did you get a chance to look at my site? Yeah, I did. And, I'm not interested. I might know somebody. It's a super simple way to do it. Because once you record that video and put it on the second page behind a non-disclosure agreement, then all you have to do is tell people that you're looking to raise money, guide them there, and all the information they need is there. Then you give them a chance to follow up and talk with you more if they want more information. So some things to think about. So downsides to working with angel investors. According to Entrepreneur Magazine, there's downsides. Obviously, one of the downsides is that you're giving away equity in your business in exchange for that money. And if your business does take off, like Google did, well, it makes people rich because and that's money you could have had if you wouldn't have given away that equity in your business. So again, some things to think about there. But outside of that, angel investors, to keep in mind, looking for smaller investments than venture capital. They're usually fine at 10% equity, 15, 20, 25% equity ownership versus angel or venture capitalists that want 35, 50%. Okay, angel investors get involved very early in the funding process. Venture capitalists get involved later in the process. It's one of the biggest difference. So when we talk about angel investors get involved very early when you don't even have a product yet, when you're not even generating revenue yet. And venture capitalists usually get involved when you're generating revenue. Oftentimes, when you're actually generating a profit as well. So some things to keep in mind is that, again, angel investors are there for the earlier stage companies, whereas venture capitalists are involved a little bit later down the road. Okay. Other ways to find your angel investors. Well, Entrepreneur Magazine suggests sites like Funding Post and also what's called Ace-Net. And Ace.net is a very good plan. It's also known as Active Capital to get money. They also suggest trying every possible investor because, again, you might pitch 50 before you get to one that's a success. And I know Yeti Coolers was this way. They pitched a lot of people, and a lot of people said no before they actually got investors. So you got to be resilient if you're going down this path. Okay. And again, angel investors typically like to start small. That's why angel investing networks, like I've talked about today, work really well, because an angel investor network goes like this. There's 5 of us. We've all put in $2,000. We combine it to 5 of us to 10 grand. You get the 10 grand, and my risk is small because I only put in, $2,000. So that's the way angel investing networks are, is they kind of pull together all of these people where you're actually able to come in and get money from one lump sum that you want, but it's coming from a bunch of micro investors that are investing only a little bit of money versus people that are actually investing a lot of money like we see in venture capital space, okay? So what are the biggest angel investor groups? Well, New York Angels, Inc., Alliance of Angels, Pasadena Angels, out of New York, Seattle, and California. Those are the 3 biggest. Some other big ones are Hyde Park Angel Network, Band of Angels out of Menlo Park, California, North Coast Angel Fund. So these are the biggest angel investor groups that group together people's money to actually make it easier for you to get money because their risk is less because they're only putting in a smaller amount of money, but you can still get the large amount of money that you're looking for. Golden Seeds is another. And Investor Circle, Tech Coast Angels, Ohio Tech Angel Funds, and groups focusing and requirements will vary. Some focus locally, some focus on startups, some focus on industry, but these are the most popular angel investment groups that I think you could tap into here. But I'm going to teach you a hack or a trick that I accidentally learned. And what I've learned has me being approached by 1 to 3 angel investors and venture capitalists per week. They come to me, and even pretty big ones. Like, so for example, 2 weeks ago, I met with Morgan Stanley. Morgan Stanley came to me to invest. So how do you get these people to come to you to invest? I'm going to teach you a hack that I didn't know about until we did this. And this resulted in massive results for us. And here's what it is. So there are all kinds of awards you can apply for, okay? Here's just some of them. And I just kind of have a simple list. If you're smart, you're going to take a picture of this because it's worth it, trust me. So here's what I found. About a year ago, we started applying for awards, 2 years ago in 2018. And there's all kinds of awards here. You can see some of them. Inc. 5000, Fortune 500, most inspiring companies, best places to work for, world-changing ideas. All kinds of these awards. Here's 20 or so of the most popular ones, right? So we actually came in for entrepreneur, and we applied for what's called Entrepreneur 360, or the most entrepreneurial companies in the United States. That's what it was. First of all, you need to know most people don't get on these lists because they never take the time to apply for these lists. But the minute we hit that Entrepreneur 360, we started getting calls from angel investors. Venture capitalists started calling us. When we got on the Inc. 5000, then what happened was then they just flooded us. We got a ton of calls. And what we realized was that these awards that you can apply for and win are the places that these guys go to get their leads. Venture capitalists are going and angel investors are going to these to actually get their leads. So if you want to start to get called by people that want to invest money into you, then you need to look at some of these awards that you think you can really qualify for and get in there and apply. Because by you applying, good chance you may get awarded and accepted. And when you do, they put you on their website. Then these angel investors and venture capitalists start checking these sources. And then a lot of them will be hunting you down to give you money. Again, it's one of really the best kept secrets I have found in this entire process of getting angel investment and venture capital because they're coming to you. Now, there are especially angel investor groups they focus on certain entrepreneurs. So for example, female entrepreneurs, Pipeline Angels and Bootstrap Capital really like female entrepreneurs. LGBT Capital and Gangels both specialize in LGBTQ plus entrepreneurs. So again, depending on some of these things, even if you're in a minority, for example, there's a lot of angel investors that will just invest to if you're a minority, to your class, whatever it may be that makes you a minority. So for example, let's say I'm a veteran, right? Well, then there's angel investor groups that focus just on veterans, okay? Let's say I'm African-American. There's investment groups that focus just on African-American owned businesses. There's angel investors that focus on all these different kind of niches that I think can really help you along the way. Backstage Capital and Minnow Tank both focus on minority business owners, speaking of which, Startup 52 works with business owners with disabilities. You see what I'm saying? I mean, if you're in one of those categories, then you have a good chance of finding angels investing just in that space. Now, Trent from YouTube says, I am in the entertainment industry specific to short films and television series, which, by the way, before I even read the rest of this, Trent, there's a lot of angel investment that focus just on what you do, because there's really a lot of angel investment in the arts, so you know that. And Trent says, do I have to already be a registered LLC before I can use your services? You don't. If you're using our services, we help you through the process of setting up your entity, your business address, your phone number. We help you through all of that. Our phone number's on the next slide. You can give us a call. We'll talk through it. Now, Snipes Like Wesley says, Trent, same here. I just started to film. Oh, look, you guys need to connect. Trent and Snipes Like Wesley, you guys are both on YouTube. You both got started in the entertainment industry. You're in a great industry. And let me give you guys some tips. Crowdfunding and angel investing. There's a lot of angel investing and crowdfunding specific to your industries. I'd look into it, and I'd also look into some grants. There's a lot of grants specific to your guys' industries as well. We talked about this. Angel investors versus venture capital is not the same. Angel investors get involved in an early stage. And as we mentioned, probably before you're even making a profit, almost always before you're generating a revenue. They want smaller returns. They want less activeness in the business. They don't have to sit on your board of directors, etc. So they're less involved in your business, and they ask for and they want less capital. Venture capitalists, well, they give a lot of money, okay? But they're giving high growth, high risk businesses money that have already proven concept at this point, very fast growing companies with an exit plan within 3 to 5 years. They're gonna want a large piece of your business. They could want 30, 40, 50, 60%, or 100% of your business. People like Jeff Clavier do both. They'll get in small to startups, and then they invest bigger into the bigger companies. And venture capitalists, I talk to venture capitalists that their start is 10 million. They don't even give companies less than $10 million. So you can get into some really high value investments when we talk about venture capitalists. So recap, angels can be wealthy or not so wealthy. Okay, you might know them, affiliated angels, you might not, unaffiliated angels. They usually want about 20% return of their investment, and their investments are typically small. A lot of angels are investing less than 50 grand a person. Angel investment groups, a lot of times in networks, specialize in certain industries, as we talked about. So you want to check before you approach them, because a lot of them might be specific to your industry. These are a great way to go for startups if you're starting a business, because they oftentimes want a smaller piece of your business. Now, if we can help you with financing, well, then let us know. creditsuite.com/get funding is where you can actually get approved. We never charge you any money to help with getting financing. Now, we don't deal with a lot of angel investors and venture capitalists, very few. Okay, but I've given you a lot of advice on how to be able to do that. But if you want credit lines, you want loans, you want business credit, we can help you with a lot of that. And when it comes to loans and credit lines, we never charge you a dime of money. Lenders sometimes pay us a referral fee, sometimes they don't. And we can help you with building your business credit as well. Give us a ring at 877-600-2487. All I ask is, if you got value here, give me a like, give me a love, give me a share, and then subscribe if you don't mind, because we'll notify you when we go live if you subscribe. All of our content's of high value like this. And by you liking it, loving it, and sharing it, it tells the social channels that this is good content and it's good information that can help other people. And if you like this, we go live on Facebook, YouTube, and Periscope Tuesday and Thursday at 1, Wednesday at 11, all Eastern time. So like I said, subscribe on our channels. You can go to creditsuite.com, find our social media links, including our podcast where you can listen on the go. And every day we post tips on Instagram, Twitter, that help you. It's all about helping you get business credit and financing. So great information, Romeo. Thank you very much. I appreciate that from Periscope, man. I love Periscope. Thanks for tuning in. And wow, Snipes Wesley, I appreciate that as well. So thanks everybody for tuning in. Give me a like, give me a love, give me a share if this helps. Like and subscribe, and then we will notify you next week. We're going to dive into more topics that will help you get money for your business, including I'm going to pull back the curtain and do something I haven't done in many, many years. I'm going to decode Equifax's business credit scores. I want you to know how they work. You have 5 scores with Equifax. You need to know how each one of them works, because if you control that, you have a much better ability to get loans and credit lines. That's one of 3 topics we're going to dive into next week. So for more information about it, we always put our live streams up, scheduled in advance on YouTube and Facebook. So you can check out our pages there and you can see what's scheduled and upcoming. We don't have them scheduled yet, but as we begin the week next week, Monday, you'll see what's scheduled for the week. Thanks everybody for tuning in. I really appreciate it. Appreciate you all. Have a great day. And if we can help you along the way,
So we had a great session on angel investors. Actually, angel investors take angel investors take lesser risk than the venture capitalists, where angel investors does not take part in the company's activities. So such a wonderful information we have got from this session. So on behalf of the management of St.Mother Engineering College, principal, HOD, staff and students, I thank all of them for permitting us to have such a wonderful session on angel investment by Dr. Ty Candle. So thank you so much. Thank you everybody. Thank you sirs. Thank you everybody. Thank you.